Good afternoon, it's Clive Lambert here from FuturesTechs, and for me it's quite a good day because it's Friday, even though it's Wednesday. Decided that with Thanksgiving and Black Friday on the horizon, and I thought I'd take a couple of days off and get a few of those jobs done around home and stuff that need doing. So yes, Friday, happy days. Now let's have a look at some charts. Been some things going on this morning. We've had cable rallying through the recent highs, and there's a weekly chart, weekly candlestick chart showing 162.62 as a resistance from September, where we failed again mid-October. Smashed through there today. Happy days. Okay, so let's go. You know, cable's on the go, is it? Well, take care would be my advice. Don't get too carried away. The year's high it's just 31st December on that chart, but it was actually the 2nd of January of this year, 163.79. So that's a big resistance that is still yet to be seen off. And the other thing I'd point out on the weekly chart is that we have a downtrend line, which, let's see if I can find it, pretty gently sloping affair, but there it is. And if we make that a bit thicker to try and illustrate the point to you, that is currently around 163, something like that. Where we are now, we're above it, but we haven't closed above it yet. And so there's a couple of things to say to us. Don't buy this high, you know, don't buy the high kind of thing, which is something that, you know, you often see people getting carried away and doing. And I think if you can see that there's resistance above the market, then please be careful and don't do that. There's a healthy looking chart, Euro Yen, and you know, new highs made there today for this move, but the same health warning needs to come with this, I'm afraid to say. If we close that chart right up and go back to 2009, the October 2009 high, 138.50, the August 2009 high, 138.74, the June 2009 high, 139.14. This is getting closer to a big area of resistance, and maybe not something that needs to be bought for now or at these higher prices. Look, if you're long already, great. I'm long dollar yen. And happy with the position, and still got room to the upside according to this chart, because the year's high is 103.74. You know, we got long when it broke. We started putting on longs when it broke above this triangle, and we've been playing it to the long side ever since, and on the side, and happy with that trade. So, my best advice to people today has mostly been don't buy stuff that looks great, because we are hitting resistance. It's very difficult to, you know, you don't want to be buying just ahead, just in front of resistance levels. If they get seen off, then there's upside potential, and great, you know, no problem at all. One trade I do want to do, and we did a little bit with it yesterday. I've lost it. Not lost it. Hopefully not lost it. Is selling the Aussie dollar, and that there's the weekly chart. Let's just try and remove some of these lines because they're not related to this. And that's the daily chart, and that looks pretty ordinary as well. And so Aussie dollar is at levels that we have not seen since back here, September, and has scope to go to 88.92, which is the August low. And then we've got the August, sorry, 88.48 is the August low. And so, you know, there's downside potential in that, and actually from an intraday point of view, we've kind of been boxed in for the last 24 hours or so between 90.88 and 91.40, and so that's having a look to see whether it wants to break that sort of rectangle situation there in that particular thing. So that's something I am interested in. Probably hindsight tells me that this morning when it got back to 91.35 and I was sitting there thinking, oh, do we short it, do we short it? Yes, the answer was yes. We'd be nicely on side now and ready for the break lower. Okay, one other thing people have been saying, shall I buy it? Is gold. Different situation here, obviously been beaten up. We've been down to 12.25, which is a new low for this particular move, although we haven't quite reached the June low at 11.79, which we can see there. Daily chart we're looking at. There's a downtrend line on gold. We are at it now. It's around 12.47. We peaked above there this morning, but so far just sitting right around that. I'm seeing a few people interested in buying this because of the doji candlestick we posted on Monday. You know, there it is, open and close at similar levels, gives you a candlestick with a small real body, a doji, and a long-legged doji at that. And actually, the mid-October low was a similar candlestick pattern. As far as I'm concerned with gold, I'm taking a watching brief on this for now and would ask that yesterday's high at 128.52 is taken out on a sustained basis before we get too excited about the fact that that may be putting in a low. So I'm afraid, yes, I'm sort of finishing this week, and the entire video appears to be a list of things not to do. I would say anyway, with Thanksgiving around the corner, 4 days, 4-day weekend in the US, pretty much. Friday markets are open, but hey, nothing really happens. It can be quite a dangerous time to be trading anyway. Volatility can be accentuated because volume dries up, and so you can get some strange moves that sort of get you worrying that you know what the market's doing, and that can make trading increasingly difficult. The big pro traders will not be around. They will not be interested. Is a general rule of thumb on these days. So that's pretty much it for me. Obviously, let's finish with one more sort of current theme, if you like. And something interesting that cropped up on Twitter today was the comparison between tulips in 1634, around then anyway. And that's not just after 4:30 yesterday. We're talking the year 1634, and bitcoins right now seems to be the flavour of the month. Bitcoins, and actually there's a chart. Okay, I don't think they had computers back in those days, so it's a hand-drawn chart with a lovely tulip on it as well. Hopefully you can see that behind me. It's there. There you go. I'll get my head out of the way. Yeah, so tulips. We're going exponential in 1634 in Amsterdam, and looks a bit similar. Well, the first part of it does anyway. To our Bitcoin chart now. We even had this little sort of blip 6 months before, where the market had, tulips had a little go higher and then came back, and then there was the big euphoria. Well, we had that in April in Bitcoins. And a very nice chap who sits in an office next to me and develops websites has asked me in recent days about Bitcoins, and he's very interested in investing £10,000 of his own money into it. And I said, well, good luck with that, but all I would say about those sort of investments is, yeah, you could double your money, you could triple your money, but you could also lose it all. And I saw a story today about a Bitcoin exchange or whatever. I'm trying my best not to really, I don't want to become a Bitcoin expert, because that would just be joining the euphoria as far as I'm concerned. So yeah, just to take care. And if you want to invest in something like Bitcoins that's just gone parabolic, then it comes with a massive health warning, and the usual health warning of only invest what you can afford. And finally, I'll just leave you with a Thanksgiving greeting, one of my old favourite cartoon things of of the Sesame Street characters sitting down for their Thanksgiving dinner. Always puts a smile on my face, always has. Take care out there, everybody, and have a good weekend. And I'll be back on. And for any clients or subscribers of FuturesTechs, hope you don't mind a couple of days without having to, without relying on my wisdom. And enjoy the weekend. Cheers. Bye.